Hey everybody, welcome to the show. I'm Hans Albrecht, of course, 15 years pro options market maker, and then another decade after that, managing a whole bunch of income funds, downside protect funds, 30 years in the industry, $1 billion in option strategies managed. As always, it is your trade, your responsibility. If you're okay with that, let's keep going. So today we, of course, have another breakout to new highs in the S&P. Everything's starting to really rock and roll here early in the year. We had a little bit of softness, and we've actually had sort of a bit of almost a weird market the last few days, where I'm seeing actually kind of a lot of high beta names, right? We've got some of those high beta nuclear and data center, and some of the sort of crypto power names like the 𝐼RNs, the ciphers. We're seeing a lot of movement, even the rare earth names. We need rare earths. So some of these things are starting to come back a little bit as the AI build out theme starts to really pick up steam again, right? But at the same time, we've got this broadening happening as well. So it's this sort of roaring 20s that I've been talking about for a long time, where you start to see everything start to kind of go, hit on all cylinders as we need to physically build out. We've seen copper go, we've seen a number of commodities go, we've seen Caterpillar doing well, all these industrials. This is really starting to go, but at the same time, AI isn't going anywhere, and these names are very important. Even the mag names are important, but we're seeing mag kind of be very gingerly, kind of some going up, some going down. We've had some nice moves today in Amazon, which of course is helping the Dow, but Meta, Google down a little bit today, my favorite. Microsoft up small, nothing to really talk about there. Apple down a bunch, that's going to weigh on the Dow and markets, but yet still we are going. Look at this incredible move that we're getting. This is not it. We are looking at the wrong Dow. Here are the diamonds. Look at this beautiful breakout right here, smashing through the highs. And then, of course, we did look at the S&P a moment ago. Let's take a look at the Qs. The Qs a little bit more measured, right? This is because of the broadening. If you look at where things are happening, it is in the other 490. What have I've been saying in so many of my videos, so many of my newsletters? It's that this broadening is coming, and the broadening is happening right now. So we're shifting into other parts. If you think about it, the S&P sort of trading around 22 times earnings. If you take out the top 10 or 15, you're trading around 15. So is there value there? Of course there is, but it's out of that very concentrated area that the market, that investors have been pushing into over the last couple of years. So now they're pushing into other things. Big, beautiful world out there. We're even seeing some consumer stocks come back, Lulu's, things like that. And of course, AI is not ending, so there's absolutely, I said a couple weeks ago, I said, the manias are not done. We are going to get more manias, and that means waves of excitement over what's happening. Why? Because this is just the beginning from an infra standpoint. Enterprises are just getting going. So anyway, if you've watched some of my recent videos, I don't want to go over the same old ground, but this is nowhere near stopping, and it's just going to be kind of this leapfrog where I think some things maybe pull back a little or sit around while other things get going again. So we're seeing some of the data names today get going. We put some positions on in Leaps Trader in this. Beautiful breakout here. Look at the outside of this base. I mean, these guys put up amazing numbers, two reports in a row, and yet they've kind of tossed it out a little bit. So really, and even though they're sort of, being kind of a little bit more careful on the valuation side these days, a little bit, although we're starting to see some things get going again, even some of the, Cathie Wood baskets get going again. We know that data is one of those things that just absolutely, the Snowflake creates this data layer that just kind of sits there and organizes data. And of course, what are we going to be creating over the next few years? Endless amounts of data. Endless. We are going to be creating mind-boggling amounts of data. And companies are going to, if this is the year where enterprise now starts to adopt this stuff, that means that they're going to be calling the companies that can help them out, and Snow is one of them. So I like this one. I wouldn't be surprised if it pulls back a little and consolidates a little bit more, but I like this one, and it's starting to look pretty good again. Memory, of course, absolutely amazing. I mean, Micron's cheaper than it was like $150 ago based on forward PE, because forward earnings estimates. It's just there's none of this stuff left, and this is going to be a problem, right? For some computer makers, I've got a position in Dell that's kind of like, it's kind of struggling a little. There are going to be computer manufacturers, even though Dell should have a lot of buying power, there are going to be some companies that make equipment that just can't get the right parts, and that's not great for them. So we'll see if that becomes a bigger bottleneck over time as this build out, as this retiling of the world kind of takes hold. But let's talk about one of the things. Oh, by the way, yeah, Goldman. So Goldman having a really, really great run lately, and I've been talking about that sort of endlessly this year. My apologies, but it has been maybe my best call. Goldman is, remember, the Dow breaking out big time. It is a price weighted index. That's a little bit dumb, right? Because what does price have to do with anything? Goldman trades at $950. If they split it 10 for 1, suddenly it wouldn't have nearly the importance that it does in the Dow. But that's how the Dow works. It's price weighted. Caterpillar's next at 621, Microsoft 477, American Express 383, Visa. But the interesting thing about the Dow, normally I don't like to look at the Dow because of this sort of silly nature of how it's made up in a way. But what's interesting about it lately is that it is sort of the rest of the world, right? It isn't just always focused on pure AI and that sort of digital world, even though over time we've seen, of course, it's become much less manufacturing based and more, I mean, NVIDIA's in there, Microsoft, what else have we got in there? We've got Amazon. There's definitely your tech favorites are in there, but it's also got Walmart, Walt Disney, Merck, Coca-Cola, Nike. Too bad Nike's in there. Well, we got Apple in there as well, which is it has been acting very poorly lately. So I'm looking for an entry point there. Well, not an entry point. I already have it, but I think that's going to set up for a nice turbo soon as well. But we've got healthcare. We've got transactional. Look, Amex and Visa. I mean, it's got a little Caterpillar. It's just got sort of a little bit of everything, right? This is sort of the economy kind of index, very sort of nice and diversified as compared to some others. So I think it's worth watching just these days, and it's certainly very interesting that it is breaking out because that it really is very typical of when there's a broadening happening. Let's talk a little bit about what's happening out there. Okay, let's take a look at what we have coming up over the next couple of weeks. Well, right now we are in the middle of CES, which is the Consumer Electronics Show. This, of course, is always about any kind of sort of electronic and gaming, things like that. But of course, this year, you just know they're going to be talking a ton about AI. We have Jensen, of course, there, really revealing that this is absolutely just not the beginning, but just a continuation, right? So it's not just gadgets it's sort of where we start to see things show up in products, right? So this is actually quite interesting this year, because if this is going to be the year where AI starts to move into the economy, and some of that's going to be into just usage in industry and in companies and things like that, certainly personally, but it'll also move into what we call sort of the physical connecting with the AI, which is sort of that Internet of Things, all the devices, all the sensors, all the things around us that are going to be infused with AI at the edge, which is sort of an interesting thing. That makes names like Qualcomm look a little bit interesting, because if we have AI at the edge, meaning right there in a device, not having to call upon the cloud for information, for number crunching and compute, then we need more powerful chips, smaller chips. There are companies out there that are going to be able to do that quite well in terms of the physical makeup of that. This really is, the show is going to talk about all these things, how it plays into all these sort of products that we have, right? So that's pretty cool. And so I just looked up this morning. So they've been talking about NVIDIA talking again. AI is no longer about big data centers, training models, but now about AI constantly running in the real world. So robotics, factories, cars, logistics systems, enterprise software. So more and more chips, and they showed that they're really starting to make even more headway in the inference space, and they're very, very efficient, right? They're so cost per token for a lot of processes, not all, very, very favorable to NVIDIA. So this stock is absolutely nowhere near done. 6 months ago, I said I prefer Micron over NVIDIA. NVIDIA hasn't moved, and Micron's more than doubled. So it's sort of mission accomplished there. I think we may get a point where NVIDIA starts to participate again. And so really, NVIDIA is kind of talking about how that sort of continuous workload, which is it's I think it's trying to move away and say, listen, we are not just about training, we are about everything else as well. And I think they are. I think they are. I think that's quite accurate. So really, the idea is that compute demand does not peak. It continues to expand and expand and expand. Right? Those gears never stop turning. So. Um, that reinforces all the things that we're talking about, not just the physical build out, but now very much the AI inference build. So we're going to be focusing much more on inference because that is the heavy workload, heavy compute side of things that starts to generate value for people, right? So far, last few years, it's been generating value for NVIDIA and for AMD and for a number of power plays. Right now, it's going to start to generate value for other people who put AI to work, and I think that's kind of exciting as it pertains to the rest. And that also, argues for our broadening. So we look at IWM here. Look at this. A lot of charts kind of look like this. Kind of a reach the highs sort of in December, then really kind of, the market got kind of squishy throughout the holidays, which I told members, I said that you can't really trust any move. And sure enough, nothing's really going on. Now we have these sort of breakout of wedge type patterns here that have potential. I don't know if we're still in a couple days hangover from that low liquidity kind of environment. It's possible that we're still in something like that, but I don't know. I don't know. So we'll see what happens. We are definitely seeing some movement, and we're seeing some follow through in a number of things out there from really Friday. Actually, we've seen some big moves in some of these smaller power plays. Copper, of course, FCX has been going bananas. I started talking about that at 42, 43, and now we're at 56. So it's a little bit of horse out of the barn on some of these things. Even some of these data center plays that got absolutely squashed have come back here. Look at Nebius, the highest levels we've seen since early December. Can we trust it? I don't know. I sold some cover calls against this because I'm seeing some decent premiums there, but I did not go full on because I don't want to give away that upside if it really decides to go. And it is one of my favorite ones, probably my favorite one out there. I think we're going to see a lot of deals from those guys. So what else have we got? What else have we got? Well, we got the power generation. So the Goldman Sachs Clean Tech and Energy Conference as well. So starting tomorrow, going 1 or 2 days, I think this again is going to be, we know what the focus is going to be. It is going to be power generation, right? AI cannot run without more and more power. The chips are not necessarily the bottleneck unless it's memory chips. It's really power that's going to make a really big difference. So that gets me excited about names like GE Vernova, which we've been doing well in Turbo Trader. We got a nice trade on there. Actually, that portfolio is doing really, really well. So if you guys have been watching and tempted to get involved, the portfolio is doing amazing. All the positions are doing well. And our Goldman Sachs one just kind of hit it out of the park. So Constellation Energy, Vistra. But again, we heard a little bit of talk today about how cooling may not be as important. So I mentioned months and months ago, I'm not saying I called this at all, but we talked about a chip that had sort of a cooling feature to its kind of physical makeup and may sort of point to a possibility that at some point these things won't run as hot. And so the cooling ideas of cooling data centers, I think it's way too early to cross out some of these themes, but the member of the market always kind of reacts at the margin. Industrial build-out engineering, Fluor. So this is large-scale industrial energy products, AI data centers. So these are some of the names that I think may get impacted. So as this conference plays out over the next couple of days, you want to watch these ones. You want to watch Quanta Services, right? So this is, I love this power, ticker PWR. Wires, physical execution, repairing things, getting out there, old dilapidated grids. This is the reality that is out there. So this industrial revolution and this sort of build out of AI is going to require fixing a whole bunch of stuff and checking things. GE Vernova has a whole bunch of software that tells you when systems are getting overloaded, power systems getting overloaded. You need all that stuff to work really, really well especially when systems are bursting at the seams, as they're going to be, because the compute is just going to be bonkers, right? The demand for compute is going to be bonkers. I mean, we are early innings in how this is going to start moving through the economy. So from the enterprise standpoint, meaning all the companies out there that are going, I better figure this out quickly. So this conference is it's about that sort of, the power side of things. They're going to be talking about nuclear. They're going to be talking about the grid. Is the grid, what about solar? They're going to be talking about, um, things that are going to be building, maintaining, stabilizing power equipment. So very much, AI starting to move into the real world, and really understanding how that sort of plays out beyond the sort of normal, usual stuff that we've been watching for so long. Caterpillar up huge. A lot of stocks have done very, very, very well, kind of quietly behind the scenes, because all anybody wants to talk about is Nvidia and Microsoft and Amazon and Apple. There are other things going on that need to be considered as well. Microsoft's AI tour in New York. So what is that? Microsoft goes city to city and they show companies how to do things. Microsoft up $5 today, I believe, on that. That hasn't started yet, but I think people are starting to get a little bit excited about that. And it's a sort of, showing people hands-on implementation, showing companies how to do this. And really, that's really going to speak to, because Microsoft is very much about the tools of AI. It's not just about, hey, AI is really, really great. It's very much about how do we make a difference for you right now. That's why Microsoft, Google are very powerful. They've got the productivity suite. They have all these tools that exist and are merely turbocharged with AI now. How does that change things? How does that bring your organization? How does it connect it more? How does it connect your people? How does it derive insight from different areas, different, hundreds of silos of information? How do we bring that all together to create better processes and make money, right? So we've got the Triple AI conference as well, the Association for Advancement of Artificial Intelligence. That's going to be Jan 20th to 27th. Serious academic and industry AI research conference, right? So, I'd put this down a little on the list of importance, but they're going to talk about things that are actually very important to us as investors, right? If we talk about efficiency of models, inference efficiency, model compression, that is important, right? If we think we are going to need 100,000 data centers around the world, and we start to find efficiencies in places, and it proves, and we find that we need fewer, well, you can bet that's going to make a difference in some of these areas that we're investing in that are very, very expensive in some cases, right? So these guys are going to be talking about, how do we get more efficient? How do we crunch those tokens more efficiently? How do we find faster AI, cheaper AI, that kind of thing, right? And when that happens, it doesn't mean demand goes down. Demand probably goes up, right? It goes up because when you make something more accessible, cheaper, easier to use, that is absolutely world changing, then more people are just going to use more of it, right? They're just going to use more of it. So, that affects all of them, basically all of them. Applied Materials, NVIDIA, Micron, you name it, AMD, et cetera. Very important. And then, of course, the data center names as well. So I think it's going to be, I kind of feel like the next couple weeks are going to be a little bit more of a trader's market. I'm not so sure we blast off. So I'm sort of trying to hit some doubles here, and kind of play around these moves, which are very impressive in some cases. Now, segment, what do we got next? CPI policy volatility. So CPI, Jan 13th, coming up. That's US CPI. And of course, that's important because of rate expectations. We know FOMC, we'll talk about that in a moment, coming up later in the month. But of course, Powell, I believe this is his last one before basically you're going to get somebody new in there, and we're going to find out who pretty soon. And that's going to make a difference, of course, because they're only forecasting 2 rate cuts at this point this year, and I'm going to bet that it's more than that when President Trump gets his guy in there. So we're going to watch carefully. CPI is going to matter. I think inflation isn't really a big deal. I think I think in some areas, of course, we've seen precious metals explode. We've seen copper go up. That has to have an effect on things to some extent, but it's very much, you've got oil going down. That means lower gas. You've got gas hitting very, very nice lows that we haven't seen in a long time. Um, Rents are coming down, and so I think things are looking up from the perspective of inflation that matters to the Fed. Trueflation numbers are down closer to 2%. But rate expectations will get that's going to give us an idea of how the Fed feels over the next few months. And then Fed chair announcement in Davos, right? So this is going to be Jan 19th to the 23rd. So it's starting in about 2 weeks. And that, of course, is going to be very, very important. We're going to find out who's next. And of course, we know they're going to probably be a little bit on the dovish side. But of course, this affects everything, right? So how can I say what it affects specifically? Industrials, infrastructure, power grid, AI, chips, the broader economy. Although I have to say that even though we see a 10-year that has barely dropped in the last little while, I did say months ago, I said, I don't think the broadening needs that. I do not think that IWM requires lower rates to go, because the benefit of AI to productivity is going to far outweigh even if rates don't go down at all. I don't think that matters. And here we are with IWM, what is it, buck 50 away from all-time highs. Exactly what I said. I said we do not need significantly lower rates at all for this broadening to happen, because it is happening. The tools are out there. They're being used as we speak, and they're going to be continuously adopted over the next few years. There's always going to be a slow poke to the game, right? I took a long time before I got an iPhone. My wife jokes about that, but there are going to be people who are slow to the game, and that means just this continues and continues and continues. And then, of course, later on in the month, we've got mega cap tech earnings. And so this could be important. We're going to want to see, are they getting a return on investment? We have a very, very bifurcated Mag 7 right now, where Tesla can't figure out what it wants to do. It's probably in the right places, but it's extremely expensive, and we're not very tolerant of expensive stocks right now. But it is very much physical plus AI plus power storage, batteries, humanoid robots, which I think people are getting ahead of themselves. I don't think these humanoid robots are around the corner. I don't think you're going to have a house cleaner robot by next Christmas. I think this is moving a little bit more slowly than people think. Whereas I think the inference phase from a sort of data and productivity standpoint is probably moving faster than people think. And so that's probably normal, right? You've got that's always what I call the low hanging fruit, right? Anybody can use software, GPT, whatever it is, all these AI agents that are going to come over the next few years. That's going to be sort of the easiest way to suddenly absolutely change the way that you do your business. Physical and robots and automation, that's more, you have to source everything. You've got to manufacture, you've got to make sure it's safe. There's all these things. There's talk of like these humanoid robots who are like punching holes in walls, and they shouldn't be. And so, we have to make sure these things are safe, just like self-driving cars. You can't just send them out there and put the beta version or the whatever version and sort of go, well, we'll see what happens. And if we break a few things and injure a few people, well, we'll just back to the drawing board, right? You got to make sure this stuff is working properly before you send it out there. Flying cars and all this drone delivery stuff. Like, this is not the kind of stuff that is nearly as easy as the early stage stuff that people and companies can use right away. So lots of fun stuff coming over the next little while. That was long again, but thank you for watching. And check out Turbo Trader if you are interested in. We're killing it already this year. It is income. It is upside. It is a great strategy that that doesn't need you to be right every single second, every day. It gives you that ability to be patient, and I love it for that. It's really my favorite strategy. I love leaps in the right kind of market. I don't think we're quite there yet. I geared down on leaps a couple months ago. I said options are expensive. I think we're going into a period where we kind of grind up towards Christmas, and I said I really am not very aggressive. all those weeks, 6 weeks ago, I said I'm selling out of a lot of leaps and actually rotating into stock. Even in November, I started to buy, I was selling out Micron calls, buying stock at 200, 220, 230. Wish I held on to all of it. But we are getting to the point where options are getting a little bit less expensive again, especially if you look out 9 months, 12 months. That starts to put leaps back on the table. Already doing a couple spreads, which fine, you can sort of trade spreads when things are a little bit higher, especially if that upside skew is high. But for now, I'm starting to see some better pricing to take advantage of in the leaps game. For example, IWM. This thing I think could reset to 270 to 290 very easily, and the options are kind of cheap. If that happens. So just like they were on Google, just like they were on Micron, they were just not priced correctly for what we're seeing. And that's what's going to make this year very, very exciting. There can be some areas where we just kind of get it wrong, or the market's gotten it wrong, and we're going to jump in and go, you know what, there's a chance for a nice reset higher. And I talked a little bit about that in the last video. So anyway, thanks for watching, everybody, and we shall see you in the next video.